C corporations. So now C corporations, you are taxed on the business level. So what that means is that you are taxed on the business level. And as you're taxed on the business level, what happens, as you're taxed on the business level, that's very different from an LLC and a 2+ member LLC that I just described to you all, right? Because those are not taxed on the business level. So to be taxed on the business level, what that means is that your income and your expenses are being reported on your corporate tax return, which if you see below, that is tax form 1120. Whatever that profit is, you will pay taxes on that on the business level. So on that corporation tax return, there will be a tax liability due if you are operating at a profit. So in that same example, if it was $10,000, it doesn't matter how many shareholders and all is in the business. That $10,000 will be taxed at 21%. That is the corporate tax rate. So it will be taxed at 21%. Then, and why, if you've ever heard about a corporation, you will hear double taxation, because then you have your corporate partner share of the profits then has to be distributed as dividends, right? And so now you have to deal with being taxed again. So this may, make sense as it relates to, let's say, an Apple. I always like to use Apple. Everybody knows, Apple as the company. So think about it. Apple's on the stock exchange. You can purchase Apple. You can own a piece of Apple. So now when you purchase a stock, you now are an owner of Apple. What happens is every year, Apple has to file their tax form 1120. They have to pay their taxes. And then guess what? Everyone's looking for their dividends, right? Their share, their profit sharing. Of however much of the company that they own. So what happens is they will distribute out dividends. And then guess what happens? You all receive a 1099 DIV, which states, okay, this is how much dividends the company has paid out to you throughout the year. And so when that happens, you then have to report it on your personal taxes. And when you have to report it on your personal taxes, what happens? You're taxed again. So you have to think about that. And so most people will say, okay, well, if I'm paying all those taxes, like, why would it ever make sense for me to be a C corporation? And so some people are C corporations for some of the following reasons, such as they want investors, right? So some investors will require you to be a corporation. If you ever have a plan to go public, then you will need to be a corporation. You cannot be an LLC and go public. You would have to be operating as a corporation. Some people, it is an income threshold. If you are making over a certain amount of money, it will be in your advantage some of the time for you to be a C corporation. So those are some of the reasons why some companies will choose to even be a C corporation. Now, keeping in mind in terms of what the taxes look like, you do have your corporate income taxes, your dividend taxes the dividend income is being taxed, and then your state taxes. Okay, so that's something to think about. Now, S Corp.
Ms. Business, real quick, because
you scared me.
No. We just watch. I'm taking notes and I'm watching. I'm listening to this Apple and I'm listening to the dividend payment. How is that? Is it taxed as a long-term capital gain, or is it like a short-term capital? How is that taxed?
It's like short-term, like ordinary.
Yeah, so if they're doing like quarterly dividends, then you're getting short-term capital gains on it.
Yeah, because they distributed short-term, so it wouldn't really be long-term.
Perfect, got you.
Shout out to Ian on the check-in.
Yeah, shout out to our brother.
All right, so S Corp. So your S Corp, you have your business income, not taxed on the business level. So with an S Corp, S corporations is, I love S corporations because I think that it is an amazing tool. And it really, as you start to sit back, you start to realize that the real separation between the S Corp and an LLC, most of the time, is just people not knowing about it. Most of the time, it's not that people don't want to be S Corps, it's just that they never knew about it and knew the advantages of it. So they just did not take advantage of converting their LLCs or their corporations over to S Corp. So let's talk about S Corps and how they save business owners all the time on that self-employment tax. and help them significantly. Like I have clients saving tens of thousands of dollars just by simply saying, hey, I don't want to be an LLC, I'm going to be an S Corp. So with your business income, the business income is not taxed on the business level. So similar to an LLC, it is a pass-through entity. So with the pass-through entity, again, that just means that it is not taxed on the business level. It passes through to the personal taxes and then it's taxed there. Okay, so what happens with the S Corp is that you have to file tax form 1120S. So once you file 1120S, that's where you're reporting your income, that's where you're reporting your expenses, and then you have your profit. Similar to when you were like a partnership or a 2+ member LLC, each owner of the S Corp, because you can have up to 100 owners in an S Corp, each owner will receive a K1. If it's just you, then you would have 100%, and 100% of the profits will just go to you. So that K1 is going to then be included on your personal taxes and then your tax there. However, the taxes that you have to think about, well, that you will incur is just income taxes and state taxes. Notice I didn't say self-employment taxes. So let's talk about that really quick. All right, so I have to always bring this chart into my conversation because it is so important that I give visuals because people digest it and understand it a lot more. So this is a diagram of how someone that's making $100,000 profit, how they were able to save on self-employment tax by being an S Corp versus being an LLC. So to quickly run through this, on the left-hand side, you have LLC. So you have $100,000 of income that you made in your LLC. That $100,000 is subjected to self-employment tax. So that self-employment tax is 15.3%. That, the income is then reported on your personal tax return. Okay, and all the income is subjected to ordinary income tax. Keep in mind, all the income is always going to be subjected to ordinary income tax once it hits the bottom. This diagram is simply to show you how you are going to save on self-employment taxes. Okay, so we're not necessarily getting into the reducing income taxes, but more so how to save on self-employment taxes. Now, if we go to the right, you have your S corporation made the same $100,000 income, but you notice that the person paid themselves a salary of $40,000. Keep in mind, when you are an S corp, you are required to pay yourself a salary. It's no specific number or percentage, but you have to pay yourself a salary. Now, this person decides to pay themselves a salary of $40,000. That is an expense to the business, so that the business is left with $60,000 on the right-hand side, as you can see. Let's just look on the $40,000 side. $40,000, it shows that on that $40,000, they incurred Social Security tax and Medicare tax. So that 15.3% was taken out because guess what? They are an employee. So on their check, they took out 7.65%. And then the company paid the other 7.65%, right? But technically it's all their companies. So in this example, they were responsible for that 15.3%. That $40,000 was then reported on a W-2. So before we go on, I just want to show you all that what this is saying here is that the person went from paying 15.3% on the $100,000 to only paying it on $40,000. Okay, so I really wanted to point that out, and I like to include this because it helps people understand exactly, how that savings work. And so it really is. It really is a phenomenal tool by just changing your entity. I usually suggest that I always get this question on what income threshold. I usually say anything over $35,000, $40,000, I suggest that you convert over to an S Corp. If you are making anything under that, then I would suggest remaining as an LLC until you are profiting above those numbers, because an S Corp has requirements, right? You have to process payroll, you have to file your taxes every single year. So you just want it to make sense. All right, so just to kind of finish out this diagram, we have the $40,000 being reported on a W-2, the $60,000 going to be reported on a K-1, which also does not have any self-employment tax, and then the whole $100,000 kind of goes down and is going to be taxed on ordinary income taxes.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.